Ladies and gentlemen, welcome back to the channel. Tesla stock is down almost 3% today, but the big story is really Nvidia. Nvidia is causing your other big tech stocks to sell off. This is DeepSeek, okay? Now, there's some things that we critically need to talk about here on this channel that could turn into a bigger issue for the markets. There's a lot of people that are confused, like why is DeepSeek such an issue for Nvidia? And I will clear the air for everyone. So by the time you leave this video, you will have an excellent understanding of why Nvidia is selling off over $600 billion in market cap today. That is by far the biggest sell-off in market cap value you have ever seen in a single day. You will also have a clear understanding of what to watch for if this could get worse, and the big catalyst we have in the next couple of days. Whether or not this gets worse or gets better will take place in the next 72 hours or so. I will also share with you the option activity, short positioning, the big rumor today for Tesla stock, and much more. But first, let's start with why Nvidia is down 17% today in the biggest sell-off in market cap value in stock market history. So I think we're all well aware of DeepSeek. DeepSeek was actually mentioned on CNBC as a potential issue for hyperscalers in the US and large language model providers in the US about 3 weeks ago. DeepSeek has been well-known information. Even on Friday, Nvidia sold off 3% via the DeepSeek news. If you bought puts on Friday, well, you're loving your portfolio today. Now, here's the problem. Mass adoption. DeepSeek is the #1 most downloaded app on the App Store. Before this morning, DeepSeek was hit with a malware attack. Someone does not like the traction that DeepSeek is currently receiving. DeepSeek has limited user downloads to China now. So if you're in the US, apparently you can no longer download DeepSeek, but the damage is done. And let me explain why that is. The issue is whether or not DeepSeek has good chips or the newest chips or not, whether it really cost $6 million to train the software, the odds are quite high that DeepSeek did something that Llama has not been able to do, Gemini has not been able to do, ChatGPT has not been able to do, and that is really use a smaller amount of chips, right? Let's face it, I am certain that DeepSeek has less chips than OpenAI, but they were able to create something, meaning they're a lot more efficient than OpenAI, than Llama, than their competitors, okay? So why is that a problem for Nvidia? Well, it could start to make hyperscalers, US, hyperscalers, question how many chips they're buying versus prioritizing being more efficient with the chips that they already have. So here's the big risk. The big risk is Microsoft and Google and Meta, Tesla even, and really all of them say, hey, we're going to work to make the chips that we have more efficient and to get more done with the chips that we already have. And we're going to take a step back on buying as many. And that is why Nvidia is down 16%. Because if DeepSeek was able to create a large language model that is arguably better than OpenAI from a lot of the third-party testing that has been done, and you can bet your ass that DeepSeek has less chips than OpenAI, okay? Well, why would these hyperscalers continue to buy massive amounts of chips, tens of billions of dollars worth of chips every quarter, if they're just not efficient, if they're not using them well? It's kind of like you have a brand new car. Something goes wrong in that car. Your tire popped, for an example. But instead of replacing the tire, you just bought a whole new car. That's kind of like what hyperscalers in the US are doing. Instead of replacing the tire, they're just buying car after car after car after car, when you only need so many cars. Okay, DeepSeek, they bought a car at a massive discount, fixed the tire, and created something that is similar to a new vehicle, right? That in car terms is kind of the analogy here. And that's the risk that we may have answers to in the next 72 hours as Apple, as Meta, as Microsoft report earnings in the next 72 hours. If Meta and these companies say, we are going to focus on being more efficient, that is the dagger for Nvidia. That is a problem for Nvidia. Now, to some extent, the cat is out of the bag because DeepSeek is open source. So essentially, Meta can go copy DeepSeek's model and take the parts that they want and well, all of a sudden become more efficient. So even if DeepSeek were to, make their model private, the damage is already done from a demand perspective for Nvidia. But the question is, just how bad could this get? And how true is this whole story? Okay, is China backing, DeepSeek? Does the CCP have the latest chips from Nvidia, and are they supplying them to DeepSeek? We don't know. Okay, how many chips were used to train DeepSeek? We ultimately don't know that. But if you take their word on face value, as a lot of investors are doing, yeah, this is really going to make hyperscalers reconsider how they're using these chips and how they're deploying them, because apparently they're not nearly as efficient as they may have thought. And that, my friends, is why Nvidia is down so much. And big tech earnings now in the next 72 hours are going to hold a lot more weight for Nvidia than they ever have before in regards to CapEx investments. I mean, Meta and Microsoft just put out their targets a couple of days ago for how much they're going to spend on AI this year. If that changes, you're going to have an issue. Now, there is some silver linings to this sell-off with Nvidia. Sure, if you're an index investor, today sucks. The S&P is down 2%. The NASDAQ is down well more than that. One of the silver linings could be the RSP, for an example, is well outperforming. The RSP is only down a third of 1%. It's outperforming the NASDAQ by 10x. There is a rotation taking place today. A lot of healthcare is doing well. A lot of defensives are doing well, and I'll explain why in just a moment. But a lot of areas of our markets are actually doing well. And some of the areas that needed an inflow or two are finally getting them today. So that is one silver lining we can take away from this. But we do have other issues, and I have other concerns, because take a look at what's going on in the bond market today. Not too often do you see a stock market sell-off cause a flight to safety in bonds. 10-year treasury yields today are down 10 basis points. As Nvidia sells off, bond yields are falling. So what that means is investors are going out and they're buying bonds. Typically, when investors go out and buy bonds on a really red day in the markets, that is known as a rush to safety. A rush to safety is usually indicative of a larger issue. Okay, look at TLT. TLT is rising right now. Look at Nvidia. Nvidia is really starting to sell off even more. Okay, that is not a very comforting sign for really the markets, the economy. It's hard to interpret if this is going to have economical impacts in the near term, but you're definitely seeing investors that are fearful today. I mean, the bond market is much larger than the stock market. Like 2 to 5 times larger than the stock market, depending on what's period in history you're looking at. So to get the bond market moving like this is kind of a big deal, especially when the RSP, which is the equal weight S&P, is actually not doing too bad today. Now, another big question a lot of people have is DeepSeek going to get banned in the US? Could there be bad, tensions between the US and China? And that is to be determined. I'm sure Trump will make a statement on this at some point. But again, the damage is done because this is open source, and it's throwing that question into company executives like, hey, even if this DeepSeek situation is not 100% accurate, like even if they, spent $6 million to create this, or $2 billion or $5 billion to create this model, it's still magnitudes more efficient than models and training that US companies are doing. So I don't think that would even be a positive for Nvidia at this point. The cat's out the bag. Question is, do companies adjust their capex? Do companies, Metas and all of these hyperscalers dial back their expectations for capital expenditures? Now, what you can also see today, which is fascinating, oil is down 2.5%. Now, I don't know if this has to do with the whole Colombia situation. If you guys are unaware, there is no sanctions being placed on Colombia. There is no sanctions from Colombia being placed on the United States because Colombia agreed to allow the US to send their citizens back to Colombia. Okay, that situation got resolved at about 11 p.m. Eastern Standard Time last night. Okay, as long as the flights of migrants are allowed into Colombia, there will be no sanctions either. So essentially, that turned into a nothing burger. Okay, but oil is still being affected. That could be because no sanctions on Colombia. That could be due to fears that the economy could weaken. Now, there's some people that have estimated AI spending has contributed about 0.5% to GDP per year over the last 2 years. If that were to go away, the economy would be weaker, potentially less demand on oil. You could make an argument for that, but it is weird what's going on in oil, and it's especially scary what's going on in the bond market today. See, it even says here on the main headline under bonds on CNBC, it says, Treasury yields drop as investors look for safety after AI sell-off in stocks. Normally, flights to safety happen like when the economy is weakening or when there is, a crash going on, which kind of is happening right now. But when you see that rush to safety, it's usually, not as the markets are 2% off of all-time highs. Okay, Trump's AI czar says that DeepSeek shows that Trump was right to rescind the Biden executive order. Also in the news today, Canada's foreign minister says she will be talking soon to British, EU, and Mexican counterparts in a bid to fend off US tariffs. Now back to the whole Nvidia situation for a moment. Nvidia has not been below its 200-day moving average since January 12th, 2023, and it just happened. It looks like Nvidia is going to close below that level, which is at $121.75. If not, this likely sets us up for a test of the $90 levels. You also had a volume shelf that came in around this time, a big spike in volume that lasted for a couple of weeks. And that was the August 5th, 2024 low. So if we take a look at the charts for Nvidia, you are now below that 200-day moving average. This has not happened in the last couple of years. So even with the crash we've seen from, the 140s down to the $90 level with the yen carry trade blow up, you were still not this weak on a technical basis. Okay, and this is day one of this whole debacle. And that's really why I think we need to be vigilant here, because in the next 72 hours, if companies start to scale back on some of their expected, AI capital expenditures and try to focus more on efficiency, then you could see Nvidia fall at least back to that 90 level, if not as low as, $50 in a doom and gloom situation. Like that would be really bad. Okay. I don't think that's the base case assumption at this point, but could you fall further from here? That's the question a lot of people have. And the answer is yes. The answer will lie in big tech AI guidance. And that's why a lot of other big tech names are selling off. Basically, if DeepSeek was able to do this with a lot less money than these other hyperscalers are spending, then the real issue is, oh crap, maybe Microsoft is pissing away $80 billion a year. Maybe they only need a fraction of that, training their models the right way to, actually create something good. Okay. That's why Microsoft is down 3.5%. Google is down 3.5%. Amazon's down 1.3%. And Nvidia is obviously down 17%. Now, the other issue is for like an Amazon, Microsoft, Google, cloud providers, the issue for them specifically is, okay, if people get more efficient using GPUs, then maybe the rates per hour that a Microsoft or a Google will be able to charge companies to train their models or train their software, instead of $10 per hour per GPU, for an example, maybe it falls to $5 per hour per GPU, or maybe it falls to $2 per hour per GPU. In that case, the AI investment that these companies are making and have already made may never work out. The numbers may just never make sense. That is another step to this issue. Now, obviously, again, maybe all of this is just BS, and maybe this is just China trying to scare everyone, but it's definitely working with that bid in the bond market. Investors are fearful following this drop by Nvidia. The big tech names you really want to watch for with earnings is going to be Tesla, Meta, Microsoft, IBM, Lam Research. These are some of the big ones. Wednesday and after hours. Thursday, you will get Apple and Intel. That will also be kind of important to the story at the same time. So really in the next 48 hours, we're going to have a lot more information to go off of and how this new development is going to affect AI CapEx budgets. Some of the positives perhaps could be if Microsoft, cuts back on their AI spending, they're going to be a lot more profitable. That could be a silver lining, but at this point, we're not looking at silver linings yet. CNBC was also talking today how, again, this could be bad news for Nvidia, but it really could highlight some of the positive things that a company like Tesla has going for them. Companies that are, as Alex Carr, Palantir's CEO, said, large language models, they are not the end-all, be-all for AI. They're the starting point for companies to create products and softwares built off of that. Okay, so large language models, that's not the end game. It is full self-driving, it is robotics, things like that. So companies like a Tesla could become a little bit more sought after, if you will, because they are not creating, large language models and renting out their GPUs. They are actually creating something. They are applying their GPUs to actually create real world AI. And that is why you did see some software stocks today, like MongoDB, Elastic, and some other names, CrowdStrike, do well today because they don't rent out GPUs for that matter. Like they don't own them or rent them out. They may rent them from other companies, which those rates are probably going to fall over time. And they're actually trying to create AI, not just large language models. So there definitely is going to be winners and losers with this whole situation. And right now, we're like ground zero. We're trying to figure out who's going to be a winner, who's going to be a loser. It does look like definitively at this point, markets are saying Nvidia is going to be a loser. Now, with that said, CNN's Fear and Greed Index has shot right back down to 38. Now, almost in the middle of fear. The stocks above their 50-day moving average. Yeah, I didn't expect it to move much today, considering the RSP, the equal weight S&P, is actually doing pretty good, or pretty good relative to the NASDAQ, that's for sure. Sitting at about 48.1%, so less than 1% of stocks today are falling below their 50-day moving average. That's, again, one of the silver linings, that it's not a collapse of our markets, it's a collapse of really just big tech. And again, the latest AI investor sentiment survey had investors flip-flop from really bearish the week of January 15th to now moderately bullish at 43.4% of investors that are bullish, 27.1% of investors that are neutral, and 29.4% of investors that are currently bearish. Now, in the news today, specifically for Tesla, according to insider information in China, FSD will be launched soon, and it's already being tested in China. Apparently, this info is highly reliable, even though I have no way to independently verify that. I have talked about this on the channel in the last 48 hours or so, ever since Tesla China introduced a free trial on enhanced autopilot. They gave everyone with a Tesla in China enhanced autopilot, the step right below FSD to try for free. They also introduced ASS as a free service in China. That's only happening because FSD is going to launch soon. So I don't think this is like huge breaking news, right? This is not a huge rumor, if you will. It's something that I am expecting here pretty soon. Now, rumor is, again, it could be before the end of this first quarter. So that would be pretty fast. Tesla gave us guidance in December for a launch in the first half of 2025. So that would be a little bit faster than expected. And at this point, I don't think Wall Street is really even caring at all about this, but it could be important when that news does come out. It may be even confirmed on the conference call for Tesla, and that's something else that we could see. Option activity today for Tesla stock is actually okay, with a positive order value of 60%. You had 60 different trades today, totaling $53.5 million. So it's really not terrible, considering, again, Tesla reports earnings this Friday. Volume today is 51.5% calls, 48.5% puts, and open interest for this Friday is 55% calls and about 45% puts. If we take a look at what the short sellers are doing today, not a whole lot of activity. You do have return shares of 436,000, borrowed shares 478,000. That looks like about 42,000 shares are actually being sold short today. So not a lot of activity overall. So I would say that's a positive, that people are not rushing into short Tesla. Now, in other news today, the Tesla Model 3 is the most affordable car to run in the United States, according to a new study. The annual energy costs of the Tesla Model 3 were the lowest in the study at just $636 per year. That's almost 72% lower than the study average of $2,246. Also being reported today that Tesla FSD supervised v13.2.5.1 has started rolling out to some owners with AI4 or hardware 4. Now, for Tesla on a technical basis, we're sitting right at that 50-day moving average, about $3 above that. You want to watch $392.13 per share. If we can hold above that, things look pretty good near term, okay? And, we look a lot better now before earnings than at $488 per share. So I'm optimistic. Very optimistic. I mean, you'd rather see Tesla sell off before earnings and then rally after earnings, right? So even after today, I'm a little bit more optimistic for a big move higher coming after Tesla earnings. But if things were to go haywire, go sideways, and well, Wall Street did not like what Tesla has to say on the earnings call, next stop is 318, where your 100-day moving average is currently at. Although I don't think that's likely, it is possible, something, that we should understand that could happen. But with that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.